Welcome back, D-traders. Let's discuss recent developments on Wall Street and a forecast by InstaForex analysts ahead of the busy day. The stock market was discouraged by downbeat corporate reports from companies with a mega capitalization. Weak earnings are hanging over the high-tech sector like the sword of Damocles. As a result, major stock indexes closed mixed on a Wednesday. The Dow Jones was the only index to close with gains. It closed with a 0.01% uptick, and the Nasdaq and the S&P 500 held a three-day winning streak. The Nasdaq sank by 2.04% and the S&P 500 shed 0.74% to close at 3,830 points. The benchmark indexes traded mixed in the New York pre-market. The high-tech sector remains under pressure in the light of negative quarterly reports and amid expectations of new ones. Stock investors are in the wait-and-see mood. The S&P 500 is expected to trade in the intraday corridor between 3,750 and 3,900 points. The culprit of the gloomy mood on Wall Street yesterday was the quarterly reports by US top companies. Google's parent company Alphabet reported unexpected contraction in profits. Microsoft unveiled the lowest growth in its revenue in the last 5 years and warned of a dismal impact of the strong US dollar on its profits. The Dow Jones extended its growth for a fourth session in a row, thanks to Visa's high revenue. The focal point in the pre-market today is the Meta stock. The shares of Facebook's parent company plunged by more than 22% in the pre-market. Meta announced its downgraded forecast of revenue for the fourth quarter, measured at $30 and $32.5 billion, against the expected $32.20 billion in the previous forecasts. Besides, Meta incurred heavy losses in the third quarter due to the poor performance of its diversion, Reality Labs. And today, traders are evaluating red-hot US macroeconomic data. On the plus side, the US GDP indicated recovery in the domestic economy. On the flip side, consumer spending declined in the third quarter. The Department of Commerce reported that the US gross domestic product revived after 2 quarters of contraction. The US economy expanded by 2.6% in the third quarter. Sequentially, the actual reading surpassed the consensus of a 2.4% increase. Exports surged by $14.4 thanks to robust sales of oil and petroleum products, manufacturing goods, and financial services. Imports declined by 6.9%. On the minus side, consumer spending showed down to 1.4% in the third quarter against 2% in the previous quarter. The major stock indexes gave a muted response to the macroeconomic data. Investors are alert to the quarterly reports by companies with a mega capitalization such as Apple, Amazon, Intel, MasterCard, Caterpillar, and McDonald's. The US dollar index asserted strength today. Its rival currencies tumbled earlier today in the light of the ECB decision on a rate hike. In a consequence, the US dollar index rebounded to levels above 110 points from a one-month low. The fresh statistics reinforced the greenback. Its index added 0.6% following the data release. The intraday corridor is seen between 109.60 and 110.70. The US economy recovered stronger than expected, proving that it might have acquired the recession. Nevertheless, the hawkish Federal Reserve puts a lid on the consumer spending and opens the door for an economic slowdown. Importantly, consumer spending accounts for more than 2/3 in the US economic output. Consumer spending eased to 1.4% in the third quarter from the 2% growth in the second quarter. Robust consumption is ensured by the healthy labor market, which encourages a rise in wages. The Labor Department reported a minor increase in initial unemployment claims last week. The first-time jobless claims rose by 3,000 to 217,000 last week, and this indicator remains low despite massive layoffs in the companies sensitive to high interest rates. In a separate report, US durable goods orders grew less than expected, and durable goods orders climbed by 0.4% on month in September, lower than the expected 0.6% growth. New orders have been rising for 6 months straight. Most of the macroeconomic data released today adds up to the whole picture of the US economy, and the US Fed will give priority to the PCE deflator in its decision making. The USD CAD pair is now trading under lower volatility after the dovish twist in the Bank of Canada's rhetoric. The loonie is trading at 1.3555 against the greenback, the strongest level since October 5. The currency pair is likely to trade in the intraday corridor between 1.3490 and 1.3590. On Wednesday, the Bank of Canada raised the interest rate softer than expected by 50 basis points to 3.75%. All in all, interest rates have been increased by 350 basis points. It has been the fastest cycle of a monetary tightening in history. Governor Tiff McClellan said at the press conference that the cycle of aggressive rate hikes is coming to an end. The regulator could decide on another jumbo rate hike and then moderate the pace to 25 basis points at a time. Everything depends on economic data and inflation expectations. To sum up, the Bank of Canada has been one of the most hawkish influential central banks, with a key interest rate at the highest level among 10 most advanced economies. The weak US dollar inspired the crypto market on Wednesday. Bitcoin surged by 2.4% in parallel to $20,774. Ethereum climbed to $1,554 for the first time since September. And today, cryptocurrencies are losing ground in sync. Bitcoin has shed 0.5%, trading at the upper border of a narrow range. Solana, Ripple, and the Litecoin are trading mixed. Wall Street is ready for a hot session today, jam-packed with the important reports which could revive the appetite for risk and support digital assets. If the flagship crypto settles above $20,600, it will be able to grow to $21,200. Otherwise, the token could sink again to levels below $20,000. And our analysts warn you about higher volatility on Wall Street today. Good luck and see you online tomorrow.